It's hard to find anyone who's not fairly bullish about world grain prices. Population growth and the predicted economic expansion in China, India and other parts of Asia all point to strong demand and good prices. At the same time, markets have rarely been more volatile, rising and falling on everything from bad weather to sovereign debt worries.
Australian grain is an export industry, so prosperity at home depends on demand around the world. And demand looks likely to remain strong as much of the developing world grows richer.
I'm talking China, I'm talking India, I'm talking Southeast Asia, Latin America. These middle-class story that you're seeing played out in China is not just China, it's all over the world.
Australian grain growers have one of these developing markets on their doorstep.
Indonesia also represents an incredible opportunity for growth. We're going to see enormous growth in the consumption of wheat in Indonesia in the next 10 or 15 years, and Australia really needs to be part of that.
Long-term demand for Australian grain seems assured. What's harder to manage is a market where prices go up and down for no good reason.
It's exceptionally risky. I mean, it can be profitable, but what makes it difficult is that the market moves in a big way in a very short time, and often for causes or reasons that are not easily identifiable at the time the market's moving.
Weather's uncertain. You've got all these debt issues going around.
35 years in the grain trade has given Mike Kruger some perspective. And his message to this year's Grains Industry Conference in Melbourne is markets will remain volatile.
There's a lot of volatility for several reasons. I think the biggest reason for volatility is that we do have some scarcity. I mean, world ending supplies of virtually feed grains and oil seeds and wheat are small and likely to get smaller again in this current marketing year. You've got all kinds of outside money, fresh cash, new investment money, totally unrelated to agriculture commodities that are now have decided that commodities of any type probably should be part of their investment portfolio, so they're moving in and out of the market. And we've also gone through, I think, a period of time where we've had more political, governmental actions that have affected markets in a very broad way. The Eurozone problems with Greece, Spain, Italy, Portugal, the talk about what's going to happen with the U.S. debt ceiling. So there's just a lot of things happening out there that are affecting currencies, that are affecting energy markets, that in turn spill back over and to affect agricultural commodities, and all of that increases the volatility.
Grain growers have to deal with this market. Many store grain and try to choose the best time to sell. Others will have contracts to supply in the future. Reading the ups and downs is a tricky business.
It's been difficult, I think, for producers. Actually, it's been difficult for the whole agricultural chain when we have markets this volatile with big price swings. But one of the things we've tried to stress to our clients is, first of all, when you have these big, unanticipated price moves higher, you've got to take advantage of it in some way, shape, or form, which means you need to sell something. You know, whether you take on a cash contract or a put option or a hedge to arrive or something in the futures markets, but you can't let those big, unexpected price spikes go without doing something. Conversely, just because we have a two-day collapse in prices in this market environment doesn't necessarily mean game's over. So don't panic and sell into those types of rapidly falling markets that don't have a real solid reason for dropping off that far.
Instead, say analysts, follow China's booming economy, and there's one profound conclusion for agriculture.
I don't think there's any way I could overstate how important China is to the future of global ag markets. Here you have a population of about 1.3 billion people out of 6 billion on the planet, whose incomes are rising at roughly 10% a year. The middle class is already 100 million households out of the 500 million. By the year 2020, that's going to triple in size. And one of the beauties of the magic moment of going from a subsistence household to a middle class is what happens to food demand. They eat more food, they eat different types of food. One of the major leaps that happens is for livestock. Meat comes into the diet. Meat consumption is going to boom in China over the next 10 years. The only question is, will they import the feed ingredients and produce their own, or will they import pork and chicken? There may be a little of both, but I think the number one way they'll go is by feed ingredient imports.
Of course, Australian farmers are mostly wheat exporters. How do they take advantage of this boom in China?
I don't think there's a lot of exports of wheat going to go to China. They're a large producer themselves. But what's happening is it's lifting the prices of all ag commodities.
Mike Dwyer is with the US Ag Department's Foreign Agricultural Service.
It's a classic case of a rising tide lifts all boats. I'm not saying you will benefit to the same degree as the U.S. because that weaker currency we have benefits any export-sensitive sector. You're an export-sensitive sector, but with a strong currency. We're an export-sensitive sector with a weak currency. It's like a tailwind for us. You probably won't see the exact same benefits that we do, but you should see higher incomes in Australia, farm incomes, than you've seen historically, if God participates and gives you a crop to bring to market.
According to Ken Quayle from Grain Growers, Australia's big opportunity is Indonesia.
Indonesia's highest consumption is in noodles, and we can very effectively supply that, and that's why we're one of the preferred suppliers. But their strongest growth in terms of new wheat consumption and also the value end of the market is actually in bakery products. And at the moment there's a preference to use North American wheats for those applications, and we want to make sure that Australia gets a share of that growing bakery market to make sure that we're getting that value growth that we're seeking.
There is one blip on the radar. According to a report commissioned by Grain Growers Limited, some customers say blending of wheat for export is causing them problems.
Yeah, there was some concern expressed quite consistently by customers across Southeast Asia and North Asia that they weren't necessarily getting exactly what they were buying. Often the wheat was meeting contract specifications, but it may not meet their expectations in terms of grade, functionality and performance. And so they considered that there was a little bit more risk in buying Australian wheat than there used to be.
Why do you think it's happened, and how do you fix it?
Well, I think it's happened as part of the transition period of an open market competition, where there isn't necessarily the maturity in the industry to address it, and we're all after competition between the companies and quick sales. I think that over time it will self-correct as customers start to become more discerning about who they purchase their grain from. But I think in addition to that, we do need to set some clearer export standards and to provide some measure of how they're being applied, so there is a bit of pressure to get that improvement.
But for the final word from a very optimistic grains conference, here's Mike Dwyer again. You told the conference about a new golden era for agriculture. Is that what it's going to be?
I hate to be the person who puts that tag on it, because each person will have a different definition of what that entails. I'm saying if profits are going to be elevated for the next 10 years, commodity prices are elevated, land prices are going up. I'm talking agricultural land prices going up. If that's not the definition of a golden era after 30 years of low returns to agriculture around the world, that's not the case today. If that doesn't qualify for a golden era, I don't know what does.